Yes, so right, let's get okay. Start the recording also. Right, so good evening everyone. So this is Roshan here. Right, so we'll try to learn a bit of basics of technical analysis. Just unmuted. Okay. So the concepts that we'll try to cover would be the analysis of stocks. What are the kinds of analysis that could be done? Candlesticks. What is the basic psychology behind the candlesticks? The types of candlesticks, single candlesticks and double candlesticks, and support and resistances, which is very very important. When we are talking about charts and the trading stuff, chart patterns and trend lines. Okay. So we'll try to go through all of this. So to start with, I'll try to keep it basic, as well as I'll try to explain it what it is necessary for us to understand. So basically, the stocks could be analyzed in two ways. One is by what is called as the fundamental analysis, and the other is what is called as the technical analysis. Basically, fundamental analysis, as the name suggests, it deals with the fundamentals of the company, right? It looks at the economic and financial factors that could influence a business. And basically, what fundamental analysts do is they try to look at the company's value, by looking at its income statement, balance sheet, the results, its performance, its cash flow statement, and all of that. So all of these add on to its what is called as the fundamental value, and they usually invest based on this. So this comes under fundamental analysis. uh, Generally they look at all these possible points. So is the company's revenue growing over a period of time? Is the company actually, is it in profits or it's not in profits? So is the performance, is it good, is it not good? Is it in a strong enough position to beat out its competitors? Is it able to repay its debts? And is management trying to cook the books, or it's a fair management who have a good potential to take the company to higher levels? So basically, all these form a part of the fundamental analysis, okay, which we will not be doing, and we are basically technical analysts, as you know. So and this is basically a long-term approach. You want to invest something for a period of many years, so people do this kind of fundamental analysis. So basically, it's meant for long-term investing. The one that we would be looking at and we would be interested to know is about technical analysis. So basically, what is technical analysis? To keep it very simple, it uses security or stocks past price movements to predict its future movements. So as we know, like stock, the daily there is a movement in the price. So what we'll be trying to do is, by looking at the movement of the price, we will try to predict its future movements, by drawing some patterns, lines, and all of that. We'll see as we go along. So what basically we'll try to understand is where a stock's price is going, based on the previous evidence that we have. So what is the evidence that we have? We basically have the price of it, and also we have what is called as the volume. So both of these play a very very key role, in our understanding of the particular stock security. So there are a couple of rules in technical analysis, and Dow's theory. Actually, there is something called as Dow's theory, which is very famous for this. And we'll not go into greater details, but the basic rules we should be knowing. So prices, the current prices, whatever a stock is running at, it discounts all the information available to the public. So what it kind of means is, there are some news or there is something else about the company. So the current price, it discounts all of it. Means it has in mind all of this information. Number two, the price movements are not random. This is very important. Trends behind the price action can be established by using technical tools. That's what we would be generally doing as technical analysts. So some people say, trading is a gambling, and all that. So, it's exactly not. So that's what it says. It's not, the price movements are not random, so we can have, by looking at the past performance, past prices and volumes, we can try to predict the future things. And third rule, and which is the most important, price trends are likely to repeat themselves. And this is very, very important. we talk about chart patterns and we talk about the candlesticks and other stuff. So this comes into picture. Price trends are likely to repeat themselves for a period of time. So these are the basic rules of technical analysis. How do we do it? So with the help of charts and data. So chart, as you all know, but just to make it complete. So charts are neat pictures that graph price movements, price and data. So the data that you see on the chart, it includes price and volume information. And of course, along with it, there'll be a lot of technical and behavioral indicators. A lot of people use a lot of indicators and all that. So we'll try to have it understand the basic prices and volume stuff. Now, to start with, so the basic thing that would be that everyone of us would be seeing when we look at a chart is a candlestick. Now, this is very, very important. So a typical candlestick looks like this. Now you can see here that a given candlestick would have high. I mean, it has an open. It starts here. It has a close. Means when it opens up in the day in the morning, it opens here, and it has a close. It would have reached a higher price, and that is shown by this small line here. We call it as either shadow or we call it as wick. So you can have upper wick, which talks about the high value. You will have a lower wick. The lower part of it talks about the low value of the day. So now, depending on the closing price greater than opening price, if closing is greater than opening, you say, it's a green candle, as you can see it from here. And we say that that day the stock is bullish. And look, if the closing price is lesser than the opening price, we say that the stock on that particular day or the candle says that it is bearish. Every candle will have a real body, a lower wick or lower shadow, a upper wick or a upper shadow. So depending on the open and relation between open and closed prices, we have either green candles or red candles. Okay. So this is about a single candle. So once we know about the candle, now we can do a lot of things with single candle itself. Okay. The most important thing is when we talk about candlesticks, it basically talks about the psychology of human beings. I mean, so if I look at a green candle, for example, now what does that indicate? A green candle basically indicates to me that the stock, it has opened up in the market, and by the end of the day, it closed at the highest part. So it neither had a low, it neither had a high. The opening itself was the low and the closing itself was the high. So what does this indicate? It basically indicates that all the people who are trading, they are really bullish on the stock. So hence no one was, it's all buying that was happening. So it ended up with a pure green candle without any upper wick and a lower wick. This candle is called as a Maruboju candle. Okay. If the opposite happens, which is a pure red candle without any wicks, now what it indicates that uh, so morning it opened at some value, and it was, people have people have sold it, and at the end of the day it closed at the lowest. So it indicates that uh, it's all a bearish, it's a sign of bearishness. So basically it talks about the psychology of the human being. So they're all tending to buy the stock, or they're all tending to sell the stock. And the third category, it's called as a doji pattern. So where you can see that where it opened up, okay, it went to a particular point. You can see the top end of the wick, and then it came down, it went down, you can see the lower part of the wick. At the end of the day, it closed at the same price as it has opened. So what does it mean? It means the bulls tried to take it up, and at the same time bears tried to take it down, but at the end of it no one could succeed. So the end result was, it closed where it opened, which means it indicates a kind of indecisiveness. So it's a neutral thing. So bulls couldn't win, nor bears could win that day. So basically it's an important sign of indecisiveness. Now next point is, how do we use these candlesticks in our trading? So just to summarize, so the key thing to understand is that candlesticks are graphical representation of price movement, and they show the market's thinking and sentiments. So whether it is bullish or bearish, and as the time passes, it tells us how the sentiment is unfolding. So open is less than close indicates bullishness, open greater than close is equal to bearishness. and it's of course it's the people that set the price and people who form the chart. So in other words, technical analysis is quite simply a study of human behavior, so our psychology to you and me. So how are the people responding that day? They're interested in buying the stock or they're interested in selling the stock. Like a typical chart looks like this, where we have candles. This is a daily chart of BEML, and you can have the volume profile. Okay, so how much, what the price of how the price is moving over the period of day, and what is the volume of the stock involved on that particular day. Right. So now we'll talk about single candlestick patterns. There are different in the single candlesticks itself. There are different things. The most important ones, which I believe are very important and which people look at them also in the charts, is what is called as a reversal patterns. There are also continuation patterns. So there are, to keep it simple, there are single stick patterns, double stick patterns, and three candlestick patterns. I'll stick myself to single candlestick and double candlestick, and whatever is very important. Okay. Now this one, to start with, this is called as a hammer. So as you can see, what it indicates is, it indicates a bullish reversal. And before I say anything else about the hammer, please remember that these kind of candles are, the location of them in the chart is very, very important. I'll show you as we go along. Now, for example, when you're talking about a hammer, let us say the market is in a downtrend, the market is coming down, and at the end of it, you observe a hammer formation. Now, it indicates that there is a very high chance of reversal of the market, which means it can start going up. So it indicates a bullish reversal. Now, as you can see from the figure, what you can observe is, if you want to understand it from the psychology point of view, now what we know, it has opened up somewhere here, and it tried to go down. It went down till a particular point, but at the end of and maybe in the afternoon session or something, it started moving up. So the bears tried their best to take it down, but at the end of the day, the bulls did not give up, and so it has closed above. So bulls have strongly taken over, even though the market is in a downtrend. You can see that now the closing is closer, the closing price is closer to the opening price. Now, actually speaking, the color of the candle does not matter. So it could be a green hammer or it could be a red hammer. So, but it indicates a reversal sign. So you can see that there's a very small shadow or no upper shadow, which means the opening price is itself the high price, or it's very close to the higher price. And color of the body is not important, and this is very important if you find it when the market is in a downtrend. For example, now you can see this is a chart of I tried to give wherever almost all the places I tried to put our own Indian stock so that you can relate. Now you can see this is a chart of Piramal enterprises. So you can see that it is in a downtrend, and at the end of the downtrend you can see a hammer. Can you all see a hammer there? And that signifies a reversal. As you can see, from the next day onwards, you can see that the prices have started moving up. And now the other thing was, fine, now you have seen a hammer. Now where do you take an entry and where do you exit? And what about stop loss? So as we have been saying, stop loss is very, very important. So generally, if I have to trade on this hammer, so what I'll do is I'll wait the next candle to the hammer. I'll wait for it to go above it, and I would actually wait for it to close. But since this is a daily chart, you cannot afford to wait for the next day's candle to close. So you can do it on a lower time frame. So I'll go to hourly. So next day, first hour, if the candle closes, it's a green candle, and if it closes above the hammer's high, I'll buy it. And the stop loss, I'll put it as the either low of the hammer, or if I am a safe trader, I'll put it as the closing price or the opening price of the hammer. So it changes from person to person. So if I'm an aggressive trader, I'll put it as the lowest point of the hammer. If I'm a safer trader, I'll put either the high or I'll put either the open price of the hammer. Anything is okay. And you can see, if I have, for example, if I had put the stop loss as the lower part of the hammer, you could see that it's giving you almost in the next maybe 2 weeks, I guess, 1 2 3 4 5 5 to 10 candles, maybe 2-3 weeks, you could see that you're almost getting 1800, 1900 to 2300 roughly, or 2000, yeah, nearly close to 2400, the maximum that it went. So you could see you could understand the importance of the formation of the hammer when the market is in a downtrend. So basically, it signals a bullish reversal.
Webinar stock webinar.
I just request all of you to unmute yourself. Okay. If you have any queries, please put it in the chat box. Right. This is about hammer. Now next is a shooting star. Exactly opposite of the hammer. I mean, so its shape is the opposite of the hammer. Now you can see this. Now what does it indicate psychologically? It indicates that it has opened up, and the bulls tried to take it up over the period of the day, but then their efforts were in vain, and at the end of the day it has come down and it has closed. It has closed nearer to the open price, and the low was not low was very closer to the open price. Now what does that indicate? It basically indicates that the bears could win that day. And if you find such a kind of a pattern at the end of a uptrending market, so there's a very high probability that it signals a bearish reversal. So once again, the shadow, it may not be there, or if you have a wick or shadow, it is very, very small. And most important in both the cases, the length of the wick, longer wick, should be at least twice that of the body. This is very, very important. Either for a hammer or shooting star or inverted hammer or the other pattern that we look, the body, the wick's length should be at least twice that of the real body. This is very, very important. Okay, real body is what you can see here, and you can see here real body size. This wick length should be at least twice of that. Okay, let us see. You can see this. This is a Infosys hourly chart. Excuse. You can see that market is uptrending. I mean, it's almost moving from it moved from 712 to almost 750. It's an hourly chart, and you can see that you can find a shooting star over there. Now, all the points that we have mentioned, please cross check. That is, the length of the wick is twice that of the body. Number one. Number two, the lower wick, it's almost nothing. It's kind of not there. And as you can see, the next day or the next hourly candle, you can see that it all indicates bearishness, and all the way from maybe 755 or something, it fell till 705. So once again, so entry, exit, and stop loss. Now if I have to trade on this, I'll wait for this next hourly candle to close. So I'll maybe sell it around 745. So, and then I'll put a stop loss of, if I'm a safe trader, I'll put a stop loss of the low of the high of the, if I'm an aggressive trader, I'm sorry, I'll put it as the high of the candle. If I'm a safe trader, I'll put it as the open of the candle. So anything is okay. So if I'm an aggressive trader here, my stop is never hit. Maybe I guess the third candle, it went up and then it shooted down. So if I'm a safer trader here, it would have hit the stop loss. But but generally it's always advisable, if you find, because it's very difficult to find such a kind of things first of all, but if you find such a kind of pattern at the end of an uptrending market, you could be very sure that the market is going to reverse. So the probability of the reversal is very high. Okay, right, and you can see the result of it. Similarly, this is an inverted hammer, looks exactly like the shooting star, but the thing is, it is formed when the market is in a downtrend. So you can see that the same futures, the wick length should be, the bigger, longer wick's length should be at least twice that of the real body, and it should have a lower wick, small lower wick, or almost no wick. And here also, in all these single patterns, please remember that the color does not matter. The color of the real body does not matter at all. Just keep this in mind. Okay, only thing is, you should see that these are found at the relevant places. Okay, now you can see this example, inverted hammer formation. This is, I guess, Wok Pharma. It's a 30 minutes chart. So you could see that market is in a downtrend, and you could find inverted hammer over there, and then the next candle has closed. So what I'll do is I'll just buy above this, and you could see that even if I'm a safer trader, I put a stop loss as the closing thing, it will never hit. I mean, and you can see, the results of it. I mean, almost from 496 I could get till the high was 536. Okay, so this is how people can trade. So that's why these reversal pattern, single reversal pattern candles are very, very important, and they give you a good amount of result. Next is hanging man, as the name suggests. So it indicates a bearish reversal. So once again, the same futures. So, and the length should be twice, and the color does not matter. This should be found at the top of a uptrending market. Now, example, you can see this is, I think, Cummins India. It's a 5 minutes chart. Okay, so, and you can see that it was an upward thing, and you found a hanging man, and then I would sell it here, and you could see the result of the formation of a hanging man over there. So most important thing is, first thing is locating the patterns in a period of the day, number one. Number two, once you locate the pattern, and either buying it or selling it and putting a stop loss, these are very, very important. Now, once you do it, you could see that it just on that day itself, it almost gave you 856 to possibly the low was 838. Let us say, okay, we close it at 844 closing thing also. You could see that almost 2% gains you would have got in that day itself. So that's the beauty of the formation of a hanging man. Now, as I said, the position, I just take the example of a hammer. The position of the location of this is very, very important. If you could see this, you could find actually a lot of hammers as such. You could see that there is one A, there's a hammer, BC, there is a hammer, D, all these are hammers, whatever are rounded off kind of. But then you could see A, even though it's in a downtrending, but it has formed a hammer. As I said, you have to look at the next candle, closing of the next candle.
1498 then.
Hello. Kindly mute yourself in case. Yeah, okay. There is one more hanging man just beside your highlighted one, but then the market went upward. Okay, let me just go back. This one. Can you just tell me, the hanging man? You said there's one more hanging man next to it.
Yeah, this is Abhishek. So I can see one more, just beside, the big green candle just beside it.
I know. Which one are you referring to? See, look at the hanging man candle, which is in the center. Okay. Now, from that, can you please tell me which is the one that you're talking about? Are you talking about the first one, second one,
on
third
the
one?
left hand side? Yeah, on the left hand side, when there is a big green candle. So
Correct.
there also I can see a green candle where the body is more than 2 times of the main body. The wick is 2 times of the main body, but then the market went up. Just below your arrow.
Below which arrow? Right side arrow, left side arrow?
Left side arrow.
Left side arrow.
Where you can see the gap in the candles,
Can you please count the candles if you don't mind?
1, 2, 3, 4, 5, 6, 7th candle from the highlighted one.
Okay. Are you talking about the down ones? I mean, maybe around 850. Is it? Tell me the closing price of the candle so that I can look at the candle. 850
Closing price
of the candle that you're talking about. Is it 850?
I'm not sure about how do I check the closing price of that candle?
It's 858. 858, the one with the longer wick on the uptrend. I think that's the one he's checking.
Correct.
Okay. So yeah. So what is the query?
So you said that after the hanging man, the market would be in the downtrend, but after this candle, the market went upside.
No, no, no. Where is my hanging man? First of all, did you locate the hanging man? The hanging man was a red candle in the center. I have put a rectangle box, right? Blue colored rectangle
Correct.
box. In the center, can you see a the hanging man?
Yes, yes, I can.
After that, there is no bullishness. It was bearish market. I think you're talking about before the hanging man, right?
Okay. Yeah, correct. I think I.
I'm,
Okay.
I'm talking about from the moment the hanging man is formed. Next to it, the hanging man basically signals a reversal. And as you can see, you can see the reversal from there itself. I think you are referring to the previous candles, if I am correct, if get it right.
Yes, yes. In fact, I was.
Yeah, yeah. It's clear, right?
Yeah, yeah. It's clear. Okay.
Yeah, from the point where you locate the candle next to it, what is going to happen? That's what we are worried about. Okay, and before that, you could see it's a uptrending market. I mean, even though the candle that you are referring to it, there were two more red candles. After that, there were two more green candles. Overall, it was an uptrending market, and suddenly you find a hanging man over there, and that signals a reversal. And as you can see, from there onwards, it has come down. Is it clear?
Yeah, yeah. It is clear.
Oh, great. Okay, let's move on. Yeah. Yeah, so position is very, very important. So now I'll just quickly talk about A. So A, B, C, D, all of that, it's kind of hanging man pattern. All of it is in a downtrending market. But what is the importance? So you can see that I talked about the next candle. You have to wait. Don't be in a hurry. Just because you have found it, don't start selling it. Just wait for the next candle to close. Either you do it on a higher time frame if you are aggressive trader, or you do it on a lower time frame. It depends on what kind of trader you are. Okay, so now here I can see that it is still a bearish one. If I talk about A, the next candle to the hanging man is a bearish thing, so I will not sell it. I will not dare to sell it because it's still in a bearish mode. BC also, you can see that I kind of find two hanging man candles, but after that I look at the next candle, it is still indicating bearishness, so I'll not dare to sell it again. But if I come to D, you can see that the next was a bullish one. So what I'll do is I'll buy it. So even though the next three candles were bearish, now if, as I said, I am an aggressive trader, I will put the stop loss as the lowest one. And worst of the cases, I think if I were a normal trader also, I'll go with half of the wick. Okay, average it. I'll go with the average of the, okay, stop loss, first stop loss. So I'll go with half of the wick where I feel it should be, you should be on a safer side. Because if you are too safer trader also, there is some probability of stop loss getting hit. But I guess if you are a normal trader, I think half of the wick could be taken as a stop loss. Okay, now you can see that it was never hit and it went all up to that particular E. And here at E, you can see, you can find the one more, it's a hanging man. And a D, I'm sorry, D was a hammer. Okay, D was a hammer. It is found at the bottom of a bearish trend and it signals bullish reversal. And E is a hanging man. It is found at the top of the bullish trend. It indicates the reversal. Is it clear? Yeah. Can you, and same thing holds good for the F, G, H. So G also, you could see that it's at the bottom and then it signals the bullishness. Okay. Right. So we just talked about one candle which was we said it was indecisive, right? The Doji. So so there are three kinds of dojis. These are very, very important. I mean, if you could find a doji, you can close your eyes and then you sell it or buy it. Okay. Of course, you should have a stop loss in place always. Now, this is called as a gravestone doji. Okay. Now, basically, this and the other one. What are the other one? Not the shooting star. You will find it at the bottom. So basically, okay, no problem. So doji, it indicates a bearish reversal. Okay, and market is in a uptrend. Yeah, it is similar to your shooting star. Only thing is the real body is not there. It is the closing price, and the opening price, they're all the same. So you have a shooting star, the body is not there, the real body, you get a doji. That's all, as simple as that. So it does not, it has a no or a very small real body, the open or close are very close to the bottom of the candle, leaving no lower shadow. There is no wick at all. You can see that there is no lower wick at all, and it has a long upper shadow. And this you should be able to see. If you are able to see it when at an uptrending market, it indicates bearish reversal. Dojis, I tell you, dojis were the tough ones to find out. Somehow I could get this doji. I tried to get the other dojis. So the other examples, 2 examples, I took textbook examples, kind of, But this is from the Indian charts. So you can see that, this is a weekly chart of Jamna Auto, I guess. So you can see that it's a uptrending market there, and you find a gravestone doji over there. So as the name suggests, it indicates that okay, it's time for the grave, kind of. So it's gonna die. So means bearishness is setting into the stock. You can see that all the way it fell till here. Okay. So this is about gravestone doji. The other one, exactly opposite of it, is what is called as a dragonfly doji. See, it looks similar to your hammer. Only thing is no real body, which indicates that the open and the close are almost the same. Here, exactly the same rather. And it is found at the bottom of a downtrending market. So you can see it once again, same properties as that of the other doji. No real body, are very small. Open and close are very close to each other, and a long lower shadow. And you should be able to find it at in a downtrending market. Example, as I said, this and the next one I couldn't get. I tried my best to find in our charts. I couldn't get them. So you can look at this textbook example, kind of. So now it's a downtrending market. You find a doji, dragonfly doji over there. It indicates the bullishness being set in, and then it indicates a reversal. Courtesy also I have put from where I have picked it up. Okay. Excuse me. Yeah. This one is a long leg doji, or it's also called as a rickshaw man. So only thing is it started, as we said, it opened up. The bulls tried to take it up, and the baits tried their best to take it down. At the end of the day, nothing has happened. In the sense, it closed at the same price as that of the open price, which means neither the bulls could win nor the bears could win. So at the end of the day, it shows us a kind of indecisiveness. I mean, where should the stock move? Should it go up? Should it go down? So there's a kind of indecisiveness. So if you find this doji at the end of an uptrending market, it indicates the starting of a bearish thing. And if you find the same doji at the end of a downtrending market, it signals a bullish reversal. Okay, so it's the same candle that we have. So depending on whether you are finding it at the uptrending market or a downtrending market, it signals bearish or bullish thing. So as you can see here, it's a bullish market. You can find you can see a doji there, long leg doji, and you could see the bears taking over from there. Okay. Yeah, and one more very important single candle reversal. See, all these are reversal single candles. You will also have continuation single candles, which I am not going to deal with, because as far as I see and as far as I know it, I think this, if you know and get a good hold on them, that's more than sufficient for us to get along. So spinning top. So this also indicates it's a neutral, once again indecisive. But in trending markets, they are similar to doji. Only thing is they have a body. Okay, so the body could be, once again, the color of the body does not matter at all. It could be a green candle or it could be a red candle, but they signify a reversal. So you can see from this chart, it's a Reliance Capital chart, half an hour chart. Now you could see that it's uptrending market, and suddenly at the top of the uptrending market, you could find a spinning top. Now it indicates that enough is enough. I have gone up enough of it, and I cannot go much upper. So the bulls give it up. So the bears would take over and drag it down all the way. You can see that, oh my god, it fell from maybe 246. If you sell all the way, you could have reached at least 230, worst of the cases, and you could have, if you're still patient, you could have got it. The low was 222. Anyway, we cannot take the lowest one because no one would be able to sell it there. I mean, buy it there. If you sell it at the top, maybe I feel 228 or 230 should be a good enough price for us to buy it. I mean, if you have sold it at 244, that's more than sufficient, I feel. And see, once again, please remember, stop, putting a stop. If you would have aggressive trader, for example, or if you are a normal trader, as I said, put it in the middle. If I put it in the middle, my stop is never hit. Please look at that. So these kind of candles are very, very important. They formulate the reversal, they signify the reversal of the pattern, and they would give you very good profits. Okay, provided you have to locate them and then you put you trigger it at the exact point and then you put a stop. Yeah, so this is all about single candlestick patterns. Okay, now we will we quickly go to two candlestick patterns. Before that, let me see if you have any queries, please put it in the chat box. I could answer them, whatever I could answer. If everything is fine, we'll go ahead. So you can type let's go ahead, or you can type let's wait. I mean, let's ask questions. Please type something. Can you go ahead?
Yes, please go ahead.
Okay, great. Okay, I could get two responses at least. Okay, so let me go ahead then. Once again, very important. Once again, I am only dealing with reversal patterns. Please keep this in mind. Okay, there are also continuation patterns, but reversal patterns. Most of the traders look at the reversal patterns. You know, that's why I'm dealing only with this. Okay, and two, as I said, two candlesticks. So instead of one candlestick, I look at two candlesticks. So one and the next one. Okay, if it is on a daily frame, so I have to look for 2 days. If it is on an hourly frame, I have to wait for 2 hours. Okay, for the pattern to complete. Right, now let's look at this. This is called as bullish engulfing. Now first day, it's a red thing. So basically, you have to find it um, at the bottom of a downtrending market. Okay, as I said, location of the reversal candles is very, very important. If you can catch them, you can catch them. Believe me, as I have shown you the things, we should be able to catch them. Just that we have to track the particular stocks from time to time. Now, if you can catch this at the bottom of a downtrending market, you know your day is done. I mean, next 1 week is done. I'll show you also. So what does this indicate? So I said it's a downtrending market. You have a bear there. I mean, the first red signal, it indicates bearishness. Nothing wrong, nothing new, because it's a downtrending market. But the second candle, you know, as you can see, it has completely engulfed. You know, it has completely covered, or the entire real body of the second candle has enveloped, you know, or engulfed the body of the first candle. Okay, I'm only talking about the bodies. Okay, don't worry about the wicks. If the wicks, first fellows wicks are above also, do not worry at all. The second candle's body has to completely engulf the first candle's body. This is very, very important. You can see from the picture that the second green candle has completely engulfed the first red candle's body. Now this indicates a bullishness, and this indicates a reversal, because I am finding it at the bottom of a downtrend. Okay, position of the wicks on either candles does not matter. Please keep this in mind. It's only the bodies that you have to look at. So the second candle's real body surrounds or engulfs the real body of the first one. Look at this. So this is a TCS daily chart. Now you can see that it was a downtrending market, and at the end of it on 18th, I guess, or 17th, 18th, is a daily chart, right? So you can see that there is a bullish engulfing taking place, and from there onwards, you can see all the way. If you would have taken it. So once again, now this is a two candlestick pattern, right? So what about the entry, exit, and stop loss? Now my entry would be the above the, so next to the second candle, I will wait for one candle to close. Okay, so once that candle closes, I'll take an entry. Stop loss, my stop loss could be the possibly low of the second candle if I am a safe trader. If I am an aggressive trader, I can go with the low wick of the second candle. Okay, it's up to you. But if I'm a safe trader, I'll go with the low of the second candle. And you can see that the stop loss is never hit. And if you have taken it at, let us say worst of the cases, you waited for, there is a next red candle, so I will not dare to take it that day. I'll wait for one more day. I can see a green candle over there, so I will take it there. And let us say I take it at 1295 or something it is. If I take it, and you could see all the way, you know, that I could get till 1380, 1400, 1444, whatever. So you could see the beauty of the formation of these reversal candles, either single candles or two candles. Huh? Clear? So this is a bullish engulfing. The next one should be a bearish engulfing. Now what it indicates? It indicates the setting of a bearish market, and you should be able to locate this at the top of a uptrending market. So same rules holds good. That is, the second candle should engulf the first candle entirely. That is the body entirely. So you can see that the here the reddish candle, it surrounds or engulfs the first candle's body. And once again, the wicks or shadows does not matter. And let's see example. This is pyramidal. I mean, this is the latest. I mean, this is hourly chart, and this is what has happened on Friday. I guess it's a very recent one. So Friday, if you have seen pyramidal, you could see it was an uptrending thing. So you could see it was an uptrending thing, and there is a bearish engulfing over there. And if you're smart enough, you could have taken that, and you could see that all the way it fell from, let us say you enter at 2380, and almost 100 points, 2390, 2397. It went all the way till 2275, but it's okay. So closing price was 2297. So now you could see the beauty of bearish engulfing. So as I said, wicks does not matter. You can see that the first candle's upper wick is more than the second candle. It doesn't matter at all. So you have to worry about the body only. So the second candle's body should engulf the first candle's body. Kindly mute yourself if there is something. Please put it in the chat box. Okay. Okay, I could see one question over here. Yeah, what time frame is best for this pattern? It's a very good question. Time frame is, it's up to you. Like, but I feel I generally go with a daily time frame, daily chart, hourly chart, 30 minutes, 15 minutes. I generally go with this. So it varies from trader to trader, but I also, I mean, I've heard that people generally look at hourly chart, daily chart, 15 minutes, 10 minutes also, some people. So these should be good enough. So if you can locate these 5 minutes, 1 minute and all, I don't believe them. I mean, I don't go with them. I will never see them. It depends from person to person, but 15 minutes is good, 10 minutes is good, 1 hour is good, daily is really good. So I always look at this. If you have seen the charts that generally we post, I mean, you would have seen that I would have not have taken any other time frame other than what I have mentioned. Okay. So as per my point, yeah, please tell me. Yeah.
Okay, this is Chandan here, and that was my question.
Please tell me.
If we look at an hourly, let's say we got a pattern in hourly, okay?
Right.
The moment you start looking at larger or smaller frames, it creates a lot of doubt on your mind, right? And that's where the question was coming. A lot of times I'm able to identify, but the confidence to take it, because then you start looking at different time frames. So what do you recommend?
Okay. Right. And now now this is I'll talk about this chart. Is it okay? It should answer your question. Okay. If it doesn't, please let me know. If it answers also, let me know. Okay. Sure. So now this is an hourly chart. I have found a bearish engulfing. Okay. Now I'll wait for the second candle to start. It has started. It is going down. So what I'll do is I will not I have to take an entry, right? So what I'll do is I will quickly go to the lower time frame. So I will go to the 30 minutes time frame. Okay. Or if I'm an aggressive trader, I'll go with 15 minutes time frame. I will not go with 10. I'll not go with 1 because that's too small a time frame. Okay. I'll go with 15 minutes time frame. So now what I'll do is I'll look for the next 15 minutes candle to close. Now, if that candle is a red candle, I'll close my eyes and I'll sell PL with a stop loss of whatever I have mentioned. Is it clear?
Yes, that explains. Thank you so much.
Okay, if I'm an aggressive trader, if I'm a safe trader, okay, I don't want to risk my capital, what I'll do is I'll wait for one more candle to complete. But generally what happens is, if you wait for one more candle to complete, I mean, this is the best example. You could see that almost you lost 50 points over there. I mean, that candle has almost 50 points in it. Is it clear? I mean, so it all depends. So it all depends upon you are a safe trader or aggressive trader. But if I have to trade, okay, I'll quickly, because I'm convinced with this bearish engulfing. So what I'll do, I'll go to the next time frame, maybe 30 minutes or 50. I go with 15 minutes, for example, and I find next candle, red 15 minutes candle. I'll close my eyes, sell it with a stop of whatever I have mentioned earlier, and you could see how much I'm going to get out of it. Is it clear?
Yeah, we're good. Thank you so much.
Yeah. Welcome. Yeah, let's move on. This is another important two-stick pattern which is called as a dark cloud cover. Okay, it's not engulfing. You can see now. What are the properties of this? So market is an uptrending thing. The first candle also says the same because it's a green market that's there. Now the next candle, what it does, it opens up. It opens gap up the next day. I mean, next day means next candle. What the time frame you're looking at? It opens gap up. So generally, if it opens gap up, what do you expect? It's a greenish market. It has opened gap up, so you expect it to go up, right? But then, no, it doesn't happen. It opens gap up, and you would start seeing that it comes down, and at the end of the day, this second candle would have covered more than half of the first candle. I repeat my statement. The second candle would have closed more than half of the first candle. So what you have to do here is you kind of mark the half of the first candle, and you could see here that the second candle's closing is way below than the half of the first candle or more than the first candle. If you can find this again at the top of uptrending market, this indicates a bearish reversal, and the name of this pattern is a dark cloud cover. So the dark cloud, I mean the red, the bearishness is trying to cover it from now onward. It's going to cover over the next few days or few hours or whatever, right? So the example, this is a Ajanta Pharma 1-day chart. Excuse. Now you can see it's uptrending market, and I could see it's a green candle over there, and I see the next red candle which opened gap up, and when it closed, it has closed more than half of the first candle. That indicates a dark cloud cover is formed. Now what do? Same rules hold good. I'll wait for the next candle or lower time frame next candle. I'll sell it now, and stop. Already I've said the second candle's low or whatever. Now if you see aggressive traders, you can see, or a safe traders, I mean, I said I'll go with half, right? Safe traders, you can see that the stop is never hit, and you would have got all the way from 2000. No, you cannot get it. Yeah, you will get it at least 2002, but somewhere between 2000 to 2040 would be your entry. Okay, and you would have already got stop is not hit even though it went up to 2000. Yeah, because you have put your stop somewhere around 2080 minimum, I mean, or 2050. It is not hit, and you could see that all the way it went down till 1680. Okay, or if you're a safe trader, I mean, next 2-3 candles you can close it. See, it all depends, what kind of trader you are. So but basically, it gives you very good results, but the rules have to be strictly followed. You have to find it at the end of an uptrending market. Okay, so this is about a dark cloud cover. Exactly opposite of it is what is called as a piercing pattern. So what does this mean? It means there is a downtrending market, and the first candle also indicates the same. Second candle opens gap down, but then from that time onwards the bulls will take over, and you could see that the bulls have dominated over the bears, and it could close it beyond the half of the first candle. Okay, so now that indicates that the bulls are now in full strength, so they are piercing, they are trying to take over the bears. And same rules, it's a 2 candle pattern. Wicks does not matter again. Second candle's body should close well into, it should be above the half of the first candle, and it signals a bullish reversal. So this is Escort's half-an-hour chart. So you could see it's a downtrending market. It's 900. It fell all the way till 820 or something. Now you could see a piercing pattern over there. Now the moment you see a piercing pattern, and same rules hold good depending on aggressive or safe trader. So go to lower time frame, because you could see that the next candle it almost gave you some 40 to 60, 30 points or 20 points, whatever. Now, so you could take an entry there, and please remember your stop has not hit at all, be it a safe stop loss or aggressive stop loss. It has not hit, and you could see the result for yourself. So all the way from 830, it has faced you. If you're patient enough, I think it's only 1 day. So yeah, I guess it's only 1 day. No, it's not 1 day. I'm sorry. It's I think 27, maybe a week or so, week or 10 days. So from 820, it gave you maximum is 900, or you could close it as per your convenience. I mean, you enter at 830, you close it at 880 also, it doesn't matter. I mean, so that's the beauty of this reversal candles. Okay. one is what is called as a bullish harami. Okay, by the way, harami means pregnant. Okay, so if you see the figure, I mean, if you see these two candles, it indicates there's a bigger, red candle and a small green candle. Kind of it's the bump. You know, like if females are there, the pregnancy, you can see the bump. This is a mother, and this is a kind of um, the bump, pregnancy bump. So that's why it's called as a harami. It's a bullish harami because uh, at the end of a downtrending market you will find this, and it's a downtrending market, and the bulls are now slowly taking over. So this indicates that. So what should be the pattern? What should it look like? Once again, wicks does not matter. The second candle, the bullish candle, should be within the body of the first candle. So they're all bearish, bearish, bearish. Market is in downtrend. And this second candle, it signals the entry of the bulls, and bulls taking over the bears. Okay, let's see one example. You could see here. Excuse. Harami also, it was very difficult for me to to get the patterns. I tell you, I searched enough number of charts, but finally could get this. This is the Motherson Sumi Systems one day chart. It's a downtrending market, as you can see, and then you find a bullish Harami signal over there. Go by the rule, wait for the next candle, right? And it's a reddish candle, doesn't matter. I mean, if you have taken an entry also, go by the rule, put a stop loss. It is not hit, you can see here, and then look at the next candle, and then from there onwards your stop is never hit, and look at where it has taken you. Okay, I'm not going to tell you where it has taken you. You can see it for yourself. Okay, and then exit as per your risk and appetite, as people say. Okay, so this is a bullish harami. Okay, let me just. Okay, no questions. Okay, yeah, is it fine? Any questions so far? I'll just pause for 2-3 seconds. If there are any questions, or can we move on? Please type something. Okay, right. Good. Let's move on. Yeah, next is bearish harami. So the properties are exactly the same. I mean, it is found in an uptrending market, and it indicates the signaling. It signals bearish reversal. I'm sorry, and wicks does not matter. And you could see this. So this is what has happened. I could not get a real chart. I tried my best. So, but anyway, this is how it looks like. Okay. Most important, yeah, this is very, very important for all these patterns. If you are sure short. Okay, first thing is you are sure short. If you want to be doubly sure short, that it cannot go wrong. In all probability, of course, these reversal patterns should come with very high volumes. Okay, sure short is, you find them, it is sure short, there's no problem. But if you want to be doubly sure short, if it comes with a high volume, it indicates that the full strength is coming into the bulls or bears, depending on where you are able to find them. So the bulls are very powerful, and they will take it up at the end of a downtrending market. If it is the opposite, the bears are very powerful, it will drag it down very soon. Okay, so always keep an eye on the volumes also whenever these reversal patterns are happening. Either it could be single stick patterns or double stick patterns. Okay, so this is all, I guess, about candlestick, single and double. Okay, now let's talk about the trends. Okay, you would have heard people saying, okay, the market is bullish, the market is bearish, it's a boring market, it's not moving. So you would have heard all these terms, right? So let's see what is meant by bullish trend or a bearish trend. Okay, so bullish trend, so what does it indicate? As you all know, every candle will have a high and a low. I'm not worried about the body right now. I'll only worry about the high and the low. Now, a bullish trend, wherever there's a bullish trend, you would find that it will always be a higher high and a higher low. I repeat, higher highs and higher lows. So keep on watching from down, go up the channel, I mean, go upwards. You could see that the high is always increasing and the low is always increasing. So you will have higher highs and you will have higher lows. This signals a bullish trend. Okay, Nifty, for example, this is a weekly chart of Nifty. So 8,000, this is showing from 8,000, and you could see that all as you go every week, the high is increasing, the low is increasing. I mean, higher lows, higher highs and higher lows, and it has gone all the way till 9,400 or something. So this indicates a bullish trend. Exactly opposite of it, bearish trend. This is a nifty hourly chart. You could, so exactly opposite. So you should have the lower highs, which means the highs are coming down, which means bulls are gone, bears are taking over, and the lows are also lower lows. You can see from the top as you come down, you could actually see the lows are going higher, and lower highs are becoming lower. I'm sorry, and lows are also becoming lower. So this indicates, that it's a bearish trend. Okay. Now, I said, people have said it's a boring market, nothing is happening. So it's sideways. You could see that in this rectangle box, you could see that there's not much movement on either side. It's just it doesn't know where to move, kind of. There's no proper trend as such. So we call it as a sideways market. Okay. People call it as consolidation. People call it as sideways market. People call it as boring market. Whatever. So basically, there's no definite trend. If you are someone who trade based on the trends. Okay. So in a uptrending market, you want to buy and then sell it up at the higher price. In a downtrending market, you want to sell and then buy it at a lower price. So this will not help you. This is a sideways market. You will neither buy, you can neither sell. It won't give you a chance to buy or sell, basically. Okay. So this is a sideways market. So these are the three kinds of trends that people that generally are there. Right. And the next most important, I would actually say this is the most important of everything, as per my knowledge: support and resistances. Now, as the name suggests, support is the level, okay, where the price finds it difficult to fall below, until eventually it fails to so and bounces back up. Okay, what does it mean? So it is a support, as the name suggests. So price is coming down. If it comes here, it has to eventually bounce back, kind of. Okay, I'll show you example also. So, but then just understand what does this mean. So if it is reaching the supply area, if it is deeply reaching the supply zone, so you should be ready to buy it. Okay. Just look at this example. It's a Scott's hourly chart. So you could see that, and support, some people do it with a line. You can draw only one line as a support, but it's always better to have a region as a support. Okay. Now you can see that I have taken a region. Maybe I think this region could be some 3 points. I'm not sure. Okay, it's not showing up, but 3 to 4 points. So it's a region that I have drawn. Now you could see that here it's taking support. It's up. It's up. Second time it has come, touched that support region, and then bounced back. Third time also, this third candle, the last red candle, its low has come till the support region, and then it bounced back, because that is the area where the buyers will become dominant, because they know that there is support level over there. Okay, and supports are generally not broken very easily. If it is broken, for example, once again it's a jackpot. Okay, we'll see how it happens. So if you see that a given stock, there is a stock, and you know the support levels. How do you identify the support levels? Very simple. Now, how did I identify? I could see that this is a strong support level, but at least 3 to 4 candles, are bouncing back from that point. Okay, don't go with one candle, don't go with 2 candles also. At least make sure 3 to 4 candles. The greater the number of candles, the stronger is the region of support. As simple as that. Okay, so no rocket science. So you could see that it's a good support region. So whenever it comes down, it eventually has to bounce back. Okay, so it bounced back once, it bounced back twice from this chart. Okay, next of it is resistance. What does that mean? A stock is going up, there is a level which, when it reaches that, it will not be able to go beyond that. It will come down eventually unless it breaks it. So it is a level where price finds it difficult or hard to break through, to rise above it, and it is pushed down. It is dumped down. Okay, let's see. You can see this is a pyramidal daily chart. You can see that this is the resistance region around 100. You can see that it's trying to break it. It tried first attempt, it did no, it couldn't succeed. It came down all the way, and once again it tried strongly. Second time it tried, no, it couldn't break, came down all the way. Third time also it tried to break it, no, because it's a strong resistance area. The sellers would be dominant. Sellers will be waiting for this for the price to come to that level. Once the price comes to that level, people start selling. So people actually make beautiful use of supports and resistances to make money in the markets, as far as I know. Okay, and I also like these most than everything else. Okay, so resistance, it breaks, I mean it comes down, and you can see somewhere now it breaks. Okay, it breaks, it has gone up, it gave you almost 100 points here, I mean from this chart, and but it has come down again. Now the other important thing is, once the stock breaks the resistance, okay, it has gone above the resistance, the previous resistance would now become the support. Very, very important. I'll repeat my statement again. Once the stock breaks the resistance and goes above, the previous resistance will now behave or act like a support. Now you can see here beautifully, it has gone up, but it's coming down for some or the other reason, but then the same resistance, which is the resistance earlier, is now acting like a support. Now see, it took support here, I'll tell you, 1 2 3 thrice it took the support, and after that it rushed, I mean it zoomed like anything. Is it clear? So that is the beauty of support and resistance. Basically they swap their roles, as the price breaks above the resistance or price falls below support. Okay, I have a few more examples to show you where we'll get a clear picture on this. So what happens at support and resistances? Always suspect a reversal. So when it is reaching a resistance level, be ready, that it is going to come down from there. Okay, and there's a high, because there's a high probability that price action will reverse at those key levels. So support and resistance levels are important they are psychologically important levels, where a lot of buyers and a lot of sellers are willing to trade the stock. Okay, people just wait for it to reach the resistance level to sell it, or people just wait to reach it to the support level to buy it. Okay, now another important thing is, at these support areas or at these resistance areas, if you can find the candlesticks that we have talked about so long, either the single candlesticks or two candlestick patterns, it's a double shoot shot. So it is a resistance, I mean it's going up, it is at the resistance. I'll go back to the previous slide. It is at the resistance. Let us say at the resistance I find a shooting star. So what will happen? It's a double confirmation. So it tried to go up, it couldn't break. It's a shooting star that you have found at the top of an uptrend. So close your eyes and then you can sell the stop with a stop loss in place. Clear? Similarly, it's an uptrend, it's in a downtrend. Okay, you have a support over there. You have a support at the downtrend. You will find it's a downward market. You will find, let us say, you will find a hammer over there, or you will find a doji over there. Okay, these are all, they all signify reversal in a bearish market. That bulls will take over. At the support you find either a doji or spinning top or hammer, you are doubly sure that it's gonna bounce up, and you can easily make a lot of points out of it. Okay, so using candlesticks in conjunction with the support and resistance, if you do this, there is nothing like that. Trading becomes easier, and you don't have to look at each and every, you need not sit each and every minute in front of the system. Okay, so this is about the support and resistances and the importance of support and resistances. I was just talking to you about the resistance becoming the support and vice versa. Now just look at this. This is an Infosys daily chart. Now we could beautifully see that there was a strong resistance, at around 360 or whatever. It tried to break 1 2 3 4 5 times. It tried to break the resistance. It couldn't break the resistance because it's a strong resistance. And support, there's a very good support at around 280 or 270, whatever. 1 2 3 4 5. Again, it tried to break the support. It has not broken the support. Now once it broken, you can see at the end of it, once it has broken the resistance, it quickly went up. But then for some reason it was coming down. Now you can see that even though it's coming down, the previous resistance is now acting like a support. So you could see here, it took support from there, went up. Again, it was coming down from 480. I'm talking about the second one. Peak, it went till 480. It was coming down. I'm referring to this. It's coming down. Look at this. Now it takes support again. Okay, and then it bounced back. So resistance has now become the support for it. Vice versa. Previous support would become the resistance. Okay. So this is very, very important, so that they will swap their roles, as it keeps broken. If the resistance is broken, that resistance would become the next support. The support is broken, that support will become the next resistance. Very, very important. Okay. Right. So this is about the resistances and support. Okay. Let me pause for a while. And yeah. So any questions, any queries so far? Please feel free. If you have any queries, please ask. Else we can move on.
Hi, this is Chandan again. Again on the time frame, it's advisable to look at a longer chart for support and resistance. But if you're doing a day trading, typically, right, you found out a point, but during the day also, do you observe these elements getting formed? Any comments, thoughts around it?
Yes. Yeah. So I mean, answer is yes. So even I do day trading, even I do intra-day trading. I'll tell you, I would get support and the resistance levels. The answer is yes.
Okay, so we should ideally look at the larger chart to establish the support and resistances.
Exactly.
Okay. So and not look at on a daily basis, on an hourly basis or half hourly basis, right?
No, see, preferably not. But see, as you know, I mean, at least if I look at my thing, I mean, I'm a pure intraday player. You would have seen it by now. I'm a pure intraday player. So now the levels I look at is on a same lower time frame, daily or 60 minutes or 15 minutes or half an hour at times, right? So now at these also we should be able to find the support and level, support and resistances. Okay, basically you trend line, I mean, which I'll talk about in the next few slides. Trend lines, you would have found at least 80% of my charts, they come with trend lines, right? So basically I look at these are only support and resistances. Okay, so on a daily time frame or a hourly time frame or a half an hour, 15 minutes time frame, also you should be able to look at these support and resistances, provided you're doing intraday. If it is a long term, it's always advisable, to go with a bigger time frame charts. Okay.
Yeah, thank you.
Okay, good. Any other queries? Can I move on? Please type yes or no. Right, great. Okay, good. 3 years, great. Okay, chalo, let's move. Excuse. Right. Yeah. Now let's talk about. So we talked about single candlesticks. We talked about two candlesticks. We talked about support and resistances. Now the next thing is chart patterns. We said prices tend to repeat themselves. Some patterns tend to repeat themselves. So these are what are called as chart patterns. There are few chart patterns, which are standard ones. Once again, they have something to do with the psychology only. Okay, as far as I know, as far as I understood the market, it has more to do with the psychological levels of human beings, because it is we who trade. Okay, may I'll try to explain it more as you go along. Right. Anyway, so this is called as a rectangle or channel breakout. This was one of the ones which we have posted in our this thing channel. Now you could see that, so the top one is what was happening. So we could realize that, it was moving in a fixed range, possibly I think 669 to 675, maybe 1 to 1.5% range. So almost the entire day it was moving only in a fixed range. So as per my case, the next day or whenever it is, once it breaks on either side, okay, please keep this in mind. It can break on either side. It can either go up or it can go down. In any of these cases, we expect it to give us good returns. So now just keep on watching. We just kept on watching the chart the next day, and then you could see that once it breaks either the upper level or lower level, whatever. Now you can see that it has broken the lower level. Immediately sell it, and as per your risk and appetite, whatever, you can buy it. Generally, what people will do is, aggressive traders, as far as I know, once they sell it, they will look for the next support level of that chart. Very, very important. Please keep this in mind. This will be helpful to many of you. Okay, because I learned it that way. Now, if you are selling it at 666, when do you buy it again? If you are okay with 1-2 points, it's okay. But ideally, if you are a good or aggressive trader, whatever it is, I would wait for it to hit the next support. So somewhere before, if you can see, it was around, somewhere, I don't know, it's around 655 or something. So you can see the front part of it. You can see a lot of, once again, a small same. Ideally, I would sell it just above that, okay? Because from support it can bounce back. That's what happens. Reach it down. From there, you could say a small bounce back over there. So the thing is, once it breaks out of this rectangle, or we call it as a channel breakout, on either side, it could be upper side or down side. This is called the bilateral pattern. Bilateral pattern means it can go either up or down. Doesn't matter. You should be aware. If it breaks above side, buy it. Breaks below the lower side, sell it. Once again, the rules of the game: when to buy, when to sell. Once the candle is broken, once the channel is broken, let that candle get finished. Wait for the completion of that candle. Once the candle is completed, sell it. Stop loss, high of the candle which broke it. Okay, high. I want to be safer side, and then I go down, it went down, and I would sell it wherever I want to sell it. It would have coolly given you 10 points at least, minimum, because it's closing at 656. It has gone till, I think, 652 or something. Okay, so this is one of the charts, and this is one more, Tech Mahindra. So once again, same logic. It was moving in a channel. You could see it was just range bound throughout the day. It was a very boring kind of thing, but then that day's boring thing would become a jackpot for the next day. Okay, patience always pays. Okay, so it's boring. It's moving in a range, very fixed range. You could just have to identify the range, and you could see that next day, just keep on tracking the chart, and the moment it broke either side. Now here it broke on the lower end, doesn't matter, start selling it. Now you could see that, the moment you start selling it, see how much it has fallen. My god, 715. Let us say the candle closed at the candle which breaks it has closed at 710, let us say. Now you sell it at 710. Oh my goodness, you get easily, it has went all the way till 688. I think low it was made is maybe 685 or something. Now see, 15 points in a day. More than 2% for TechM. What more do you want? That too, if you see carefully, 130 to 230. I think it broke it at around 130, and within 1 hour, it gave you, how much? It's too much, right? Kind of. But the beauty is, that's the beauty of channel breakout. If it breaks out, from a constant, from a fixed channel on either side, it can give you a good breakout. Just keep this in mind, okay? And rules remain the same. So once the candle breaks, wait for the completion of the first candle, sell it there. Okay, once again, if you are this is 5 minutes candle. Okay, this is a 5 minutes candle. If you are a safe trader, aggressive trader, you can go to the 3 minutes candle, and then you sell it so that you could benefit it more. Stop loss is the same. Put the high of the breaking candle. That should be good enough. Okay, right. Yeah, one more example. This is Radico Khaitan, I guess. So once again, it was moving in a range for many days, almost 2 weeks, I guess. It was moving in a range. You will have, actually, ideally speaking, they define it as equal highs and equal lows. See the high it is making, low it is making the same. So sideways market, we talked about sideways trend, right? Neither bullish nor bearish. It's sideways. The moment this fellow broke, now you can see the beauty of it, all the way from 385 or 382. Chalo. Next, the candle which broke it was around 382. You could see where it has come. My goodness, 337 in how many days? 12th to 16th, maybe 3-4 trading sessions, and you get how much returns? Count it for yourself. My goodness, it's good. So that's the beauty of channel breakout or rectangle breakout. Okay, so this is a bilateral pattern, which means either way it could give a breakout or breakdown. We call this as a breakdown. The other one we call it as a breakout. Sorry, yeah. This is a rising channel breakout. This I just took it from I just took it from net because I felt it was interesting. So now this is a rising channel. Same thing. It's a rectangle channel, but it's a rising channel. The channel was going up, and then it's all it's there. It's a trending channel. But then once the breakdown happens, you call it as breakout. I call it as breakdown. Once the breakdown happens, you can see the result of it. Okay, you could see that how much it gave you. It gives you so much, actually. I tell you. So it's good to look for such jackpots. Okay, I gave you the courtesy also from where I picked this up, and yeah, this is once again where this is a Bajaj Finance hourly chart. Now you could see that it was moving in a pure falling channel or a downward channel, and suddenly you find that this candle has that become bullish, and then it broke it. Now the moment it broke it, you could buy it and then see for yourself. 2520, you buy it, and all the way till 2620. Okay, 2610, 90 points, man. And it's just a matter of, I don't know, We have to just check, maybe 1 day, I guess. Okay, so just imagine, I mean, that's the beauty of it. The rules of the game remains the same. Stop loss, the low of the first candle, aggressive, and everything else is the same. Okay, so this is all about channel breakouts. The next interesting pattern is ascending triangle pattern. Okay, now ascending triangle, as it indicates, so you have a strong resistance in some region. I'm just trying to explain the pattern. Okay, you have a strong resistance, and the stock is in an uptrend, and you could see that as the stock is moving up, it is making it's a bullish trend, which means it's making higher highs and higher lows. You can see the lows, you know, and they are taking support from this lower line what I have drawn there. Okay, so they are taking support from it. So then the lows are increasing, so that's what I mean by higher lows. Highs are increasing, that's what I mean by higher highs. And at some point, once the resistance is broken, now you can see the result for yourself. You know, maybe 1825 it breaks, and then it stops. It stopped at 1950 plus 100 points. It's, you know, more than 10%. No, 5%, 5 to 6%, because 20 is 1%, right? For Torrent Pharma, this is a Torrent Pharma daily chart. Now you can see it for yourself. That's the beauty of it. Once again, entry, the candle which closes above the, you know, this the resistance that is shown here. Closing, you enter, put the lowest of that candle as a stop loss, and then you can enjoy the points that are going to come to you. Okay, so this is a ascending triangle, you know, ascending because it's going up. You know, you can see that it's a triangle, I mean, and then this bluish thing, I have not joined them actually. Ideally we have to join, but then there are no candles to join. Okay, so it broke it, and then it becomes, you know, it gives a good breakout. Okay, it's a bilateral thing, which means the ulta, the opposite can happen, which means, let us say, instead of going up, it starts coming down, and if it breaks this lower support level, can you see the diagonal support what I have drawn where it's taking support? If it breaks that, there is a good chance that it will come down further. Okay, that's why it's a bilateral pattern. But mostly ascending triangle gives you good breakout in the upper end. Okay, example of ascending triangle, this is Tata Elixir. Okay, this I remember, I don't know whenever it was, but I think I have traded it. Okay, because I was just looking for that pattern. I was very sure that it's going to do it, and then it gave me very good points. You can see only 2 candles. It's a 15-minute chart, by the way. So within half an hour, it gave you, you know, from 1005 to 1035. 30 points is not a simple thing, right? Tata Elixir 3%, right? So what I'm trying to tell you, see, so the resistance is there, and this lower diagonal line, it acts as a support all the time. You can see 1, 2, 3, 4, 5, 6 candles. What more confirmation you want? It's a strong support. It's not going to break that. Okay, that easily. If it breaks, it's going to go down. So that's, once again, because it's a bilateral pattern. So now it breaks the top of the triangle, and then you can see the result for yourself. Okay, so bilateral pattern again. Now descending triangle, this is once again yesterday's chart. I mean the Friday's chart. This is Sun TV, 60 minutes chart. Okay, Friday's thing, or maybe Friday and Thursday both combined together. Now this is a descending triangle, exactly the opposite of ascending. So you have a strong support, which I have shown it by a line, horizontal support line which I have drawn, and here it will be like a lower highs and lower lows. You know, you can see that it is coming down, coming down, coming down. The highs are becoming lower and the lows are becoming lower. Eventually, when it breaks this resistance level, you can see the result for yourself. You know, almost from 575, I guess it has broken, and it gave you, my God, till 523, it has given you 50 points, I guess. Not a simple thing. So it's not always that you'll get so many points. I already told you what could be your target. You know, if you're aggressive, look for the next support level, excuse. Okay, or else be happy with whatever you get. Anything is fine, no problem at all. Okay, so this is a descending triangle. Once again, this is also bilateral pattern, which means if it breaks above, also it can go up. Okay, this is another pattern which is called a symmetrical triangle breakout. You know, the triangle now, if you can see the triangle, it's symmetrical. You know, it makes equal angle. I mean, if I draw a central line and then see the angle, maybe 30 degrees on the up, 30 degrees on the down. So I call it as a symmetrical triangle breakout. Once again, bilateral triangle, it can break out or break down. Here you can see that the top one is it's behaving like a strong resistance, the bottom line is behaving like a good support. Once it breaks, you can see the result for yourself. It gave, and quickly it gave almost, it went up till 1350. But of course, I don't believe in selling it at the top big. No one can do it. So maybe we can sell it at 1325 or whatever. So get good profits out of it. So this is a Kotak Bank, by the way. Kotak Bank one day. It's very recent. I mean, excuse me. Yeah, symmetrical triangle again. So this is Adani Enterprises. Yeah, I think this also I remember posted in the channel. It was long back, I guess. But yeah, I was keenly watching it, by the way, and I traded on it also because I was kind of very sure of it, because I could see that symmetrical triangle pattern made on the previous day, and you can see from once it broke out at 154. Now you can see that it all the way went up. Okay. By the way, apart from the target that I have mentioned, you can take it as a support level. Generally, on a general thing, the target would be, you can see this the broader pattern. Can you see the broader thing? I mean, this triangle, as it is moving to the right side, it is becoming narrower, right? So look at the broader thing. So it would make this much, the target could be this much. So roughly here it is 151.5 to 154. So at least 3.5 points. The target should be 3.5 points. But here it gave me much more. It went and touched 160 almost. It gave me almost 6.5 points. Okay. So if it gives you 3.5, that should be enough. I mean, you don't expect much from this pattern. I mean, that is what it means. Okay. So that's a symmetrical triangle. Bilateral pattern, breakout or breakdown, anything can happen. You can see it in this example, same symmetrical triangle pattern, but then it's a SRS Sriram Transport Finance, and now you can see that there's a breakdown here. Top one strong resistance, bottom one strong support. Once it broke the support, now you can see for yourself. My goodness, beauty. I mean, you can just see how good it gave. Okay, it's just that we have to identify the patterns. So how do we identify the patterns? Only thing is, keep observing charts. Don't try to jump into trades. At least my personal view is always what I have learned, from my trading experience. It's best to know at least some part of the trading, just instead of taking trades straight away. Okay, don't be in a hurry. Always, patience, pace. At least something where you should sell, where you should buy. At least that minimum knowledge one should be having, I feel, as per my knowledge. Okay. Anyway, this is a breakdown, and you can see the effect of it. It's a symmetrical triangle, by the way. So bilateral pattern, it could either go up or go down. Now in this case, in the previous two examples, you have seen it has gone up. Now it has gone down. It can go up or go down. That's why I've taken this example. Yeah, these are called as continuation patterns. Okay, the earlier ones they were bilateral patterns, which means it can give you breakout or breakdown. This is a continuation pattern. What it means, whatever pattern was existing, whatever trend was existing, it continues. Now here, it's a flag pole breakout. Earlier, you can see that there is a bullish trend. Okay, the pole. See here, the taller one from the down I have drawn this is called a pole, and this diagonal region, kind of looking like a channel. The diagonal channel, it's called the flag. Okay. Now, whenever flag pole pattern is found, so what it indicates psychologically, so it has run up. Good. It has given a good run up, as you can see from the pole. 1, 2, 3, 4, 5, some 6 candles, green candles, very good candles. Now it is taking some kind of rest, and it's small consolidation is happening, just indicating that it is ready for another big run. Generally, flagpole people, look for flagpole patterns, as far as I see it. Okay, so it's just resting for a while, just to make sure that it wants to run again. And once it starts running again, what should be the target? The target should be the length of the pole. Okay, so at least you expect it to give you the length of the pole targets on the upper side always. Okay, so now you can see that it would have given here 1800 to 2000 or 2100, 300 points. So once it breaks around 2100, it went all the way till 2400. So it gave you 300 points. Clear? So uptrend, I'm talking about the topmost candle. Of course, if you still hold it with the rule of our stop loss, oh my God, it would have taken you till 2800. Okay, but it all depends on what kind of mindset you have. You are happy with that, that's fine. because it can after hitting this it would have come down and hit your stop loss also. So if it gives you good points, you can take it away. That's good enough. Or if you wait also, it gives you much more. So it all depends anyways. Yeah, so this is a flagpole breakout, so where it's a continuation of the previous trend. It was a bullish trend, it continues to be bullish, only that small flag consolidation is happening. Okay, this is the opposite of it. I couldn't find I tried my best to find charts, but I couldn't find it. So I just picked it up just for understanding. So if you have understood the flagpole, bullish flagpole, this is very simple. It's exactly the opposite. Now here it's falling down, this is a pole, this is, so now after falling it's just consolidating, it is taking some kind of rest, and just once again to fall more, that's all, nothing more than that. So now once it starts falling, once it breaks this lower diagonal, lower resistance line, you can see it falls, and once again the target would be the length of the pole. Okay, it would have given you here, as you can see, right? So this is about bullish and bearish flag pole patterns. Okay, another continuous pattern is the bullish flag pennant. Okay, the only difference, this looks like a flag. Okay, here it looks like a pennant. I mean, pennant, maybe it looks like a symmetrical triangle, just to understand. Okay, once again, it's a bullish thing. So what it indicates, it's in a bullish mode, but then it's the highs are becoming lower, the lows are becoming higher, which means it's kind of consolidating. But then once it breaks this, you can see the result for yourself. It just started running, and it gives you very good returns. So it's a bullish flag pennant. Exactly opposite of this would be the bearish flag pennant. Okay, right. So the next one, next continual pattern is a round bottom. Okay, round bottom pattern. If you can find very good patterns of this, it would be a jackpot. I remember this. I think we had it in our channel. This is, I think, some 3 months back or 2 months back. I think November, yeah, somewhere October, November. So I think exactly this is what I expected it to go up, and uh, so yeah, the targets here would be the depth of the cup. I mean, the width of the not width. I'm sorry, depth of the cup. So depth of the cup here, roughly, it's the cup low is at 770 maybe, and the cup high is at 797. So you expect to get at least 25 to 30 points. Okay, once it breaks above this cup. I mean, round bottom. That this is called as a neckline. Top, what I have drawn, we call it as a neckline. Once it breaks the neckline, it can give you 30 points at least. Okay, now you can see it actually gave me 20 points easily, just like that, because two candles only gave me 20 points. After that it came down, but once again I follow my rule. I put the stop loss, and then if I still wait, it gave me like anything. I'll tell you, it never stopped. Sometime later, I think we have uh, updated it. I mean, it gave you 900 plus. It never stopped after that. Anyways, that generally doesn't happen. I'm happy with 30 points, which is expected to give, which it gave. That should be good enough. Okay, so this is a round bottom. Another very interesting pattern is a cup and handle pattern. So once again, most of the people look for this pattern. Once again, it has something to do with the psychology. So now it has come down, it has gone up. So it can go much up, but then it takes a pause there. So it kind of falls down a bit, and then falls down a bit, and then once it breaks it breaks it with high volumes. You can see the effect. It will not stop till it can stop, but before stopping, it should be giving you what? It should be giving you the depth of the cup. Excuse. So the depth of the cup is somewhere here, 200 to 220 is that. So I think 210 I would take it, because only one candle is protruding out. So 210 I enter. 270 I guess is the neckline. So 60 points I expect from it, and it gave me my 60 points easily. I mean, I think it gave me, and it gave me much more, of course. That's a different story, but 60 points it should give, and it has given. So once again, continuation pattern. So it was in a bullish thing, and it continues to be bullish. Yeah, I think I have four more patterns, and I'll quickly talk about trend lines. I think it would take another 15 to 20 minutes. I hope it's okay for all of you. Okay. Any questions, by the way? Okay, let's move on. So Yeah, these are reversal patterns. Now, we talked about bilateral patterns, we talked about continual patterns, and let's talk about reversal patterns. Now, this is a M pattern or a double top pattern. Reversal pattern, as the name suggests, it reverses from there. So you can see that it's a bullish market, and then you see that it has formed a double top. Now, what it indicates is psychologically, it went to one point, it could not sustain beyond that point, it has come down, and it took support. Okay, from the support line, and once again tried to go up, once again tried to break it, but exactly at that point it is rejected. So which means there's a very strong rejection there. It's very difficult to break that level. Okay, and so it has come down, and here once it breaks this, it's a M. Can you see a M over there? It's a M pattern. Okay, so it's also a double top pattern. So once it breaks down the support, it falls like anything, and the targets would be the height of the top, double top, from the neckline. So whatever, you can measure it somewhere around 345 to 375, 370 maybe, yeah, 372, whatever. So 30 points, I guess. So it should give you 30 points, but it gave you much more. You can see that it broke. It gave you much more. Okay, so this is about a double top pattern or M pattern, which is a reversal pattern. It was a bullish market, but then after this pattern, it became bearish. It made the market to turn into bearish because it couldn't break the resistance. Another is double bottom pattern, where it's exactly opposite of that. So now it's a bearish market. It fell down, and at one point it took very good support. It didn't go below that, went up. There is this neckline. The neckline acts as a resistance. It doesn't allow it to go up. Okay, so it fell down again, and once again took very strong support from this, which is once again at the same level. Generally, people put a point there, but once again, double bottom or double top, you can have a small region. Don't expect one it should touch the exact same point which it has touched earlier. No, small region is okay, like what I have put here. So it touches there, bounces back from there, and bounces very strongly, and once it breaks the neckline, it gives you. So once again, the target it should give you is the distance from the neckline to the double bottom, that rectangle, small rectangle that I have drawn at the bottom. That much it should give you. So 1650 to 1775, 125 points is what you expect, and it gave you much more. As you can see, it gave you much more. Okay, so these are all the patterns that I'm talking. You will have many more patterns, but as far as I know, these are all very strong patterns. If you can find them at where we are supposed to find them, there's nothing like that. These patterns are enough. We need not sit every day in front of the computer, but just that we need to have patience till the formation gets completed. Okay, yeah. Another one is head and shoulders pattern. A lot of people trade on this. Head and shoulders, very famous also. So yeah, reversal pattern, which means it's in uptrending market. You can see before the pattern started, it's an uptrending market. So you have a left shoulder. So the name suggests that their head and shoulders. We'll have one head and two shoulders, of course. So now you'll have left shoulder here. The head is bigger, okay, because head is taller, kind of. Topmost, and then you have a right shoulder. Now the left shoulder and right shoulder need not be necessarily of the same size. Just keep this in mind, okay? Left shoulder and the right shoulder need not be necessarily of the same size. Number one. Number two, head always should be bigger than the shoulders. There's no doubt on that. So what does it mean? It tried to break this. No, it couldn't. And then it took the support from the neckline. Now, this down line, I call it as a neckline. So, and then it tried to bounce it from there. It couldn't break particular level, came down, tried again, but then couldn't succeed. Now, bulls gave up. We tried once, twice, thrice, we cannot try it again. They gave up. And once it breaks this neckline, you can see the beauty for yourself. Target, neckline to, ideally speaking, neckline to head, it should give you, or neckline to shoulder also is good enough. Okay, don't be too greedy. Okay, so once it breaks, you can see it has given you immediately. Also, it gave you almost, it broke at around 270. It broke, and it gave you at least 200. Yeah, see, there was only one green candle in between at 200, so almost 70 points. No, it's a stock of, it's a Vedanta, by the way, weekly chart of Vedanta. Okay, so that's too much, right? So that's the beauty of head and shoulders pattern. Yeah. So this is inverted head and shoulders pattern. This is the Titan. This is. It should give me this. It should give me now. I'm looking eagerly for it for the last 1 week. So you would have seen me putting it, it should, will it give 1000? Still it is on. So last 2-3 sessions, it is not, it's a flat, it's trading very flat, but I am expecting this to shoot up to 1000. As per my knowledge, it should give me 1000 before February. Okay, it should give next week. I think it should start running up. Okay, I don't know, let's see. So once again, it's a reversal pattern. So you can see that it's a bearish market, it is falling down. And then you can see the left shoulder formation, you can see the head formation, you can see the right shoulder formation. And once it breaks, let's hope it breaks, it should start running like anything. Okay, so this is about inverted head and shoulders patterns. Okay, so these are all reversal patterns. So we have seen bilateral patterns, we have seen continual patterns, and reversal patterns. So these are the most sought after or most looked into patterns, among the traders. Last session, this could run for 10 minutes, not more than that, is trend line analysis. Very, very important as per my knowledge. Okay, because it is basically something to do with the support and resistances. So we all have seen the horizontal supports and horizontal resistances that we have been drawing in the previous slides also. Now, what's the trend line? What's trend line analysis? So basically, we just look at the support and resistances, but not horizontal supports and resistances, but we look at the support and resistances drawn at some angle. So what we have seen earlier are the horizontal trend lines, right? So now when we draw it at an angle, it becomes diagonal trend line. So basically, it also tells us about what is the trend that is there. I mean, is it a bullish trend? Is it a bearish trend? Right? For example, the rectangular channel that we have seen, it was a sideways trend. You had a trend line top, you have a bottom trend line. The top trend line is behaving like a resistance. The bottom trend line is behaving like your support, and both are, holding it. Once it breaks, that's good. You have seen an example of what happens. So it basically tells you about the trend. That's why the name trend. Okay, so trend lines are an important tool in technical analysis for both trend identification as well as confirmation. And how do I draw a trend line? It's very simple. A trend line is a straight line that connects 2 or more price points. I would say I will not be happy with 2. If I get 3 or more, it indicates a very strong trend line for me as per my point of view. So 2 I will not accept. 3, I mean, my point of view, as per my experience. Okay, 3, if it passes through 3 price points, that's a good trend line. If the more the points it passes through, the stronger the trend line it is. What do you mean by stronger the trend line it is? I'll show you in the next slides. Okay, that line extends into the future, indicating that it continues to act as a support or continues to act like a resistance. Excuse. Now you can see this example. This is a Reliance chart. It's a 1 month Reliance chart for a longer period of time, but then just I wanted to show you. So you can see that there is a support trend line that I have drawn, that's drawn over there. Sorry, and you can see that the stock is in upward movement. Here it is 360 or something. It's going up, going up, going up. It's continuously on upward movement, and whenever it is coming down, it is always taking support at this trend line. Please see that. So 1, 2, 3, 4, 5. 5 times it tried to break the support, but it couldn't break the support. It's a very strong support. Once again, at this support, the candle, whatever is happening, if it, depending on what we have seen earlier, if it is a reversal candle, that's a jackpot for you. I mean, you can be doubly sure that it will go up. Okay, it will go up. And if it breaks the support, once again it's a jackpot, because you know that the support has broken, so it has to go down. Okay, so trend lines are very, very important. So now this is a strong support trend line. It has never broken it. If you see the full chart also, it never broke it, because the price kept on increasing. Reliance is now 1100 plus, so it was a very strong support. I hope some of you, or at least who has seen this, would remember the previous Friday this chart was put up. This is a beautiful thing. Now this is a trend line, indicating the resistance. What does that mean? Now see, it tried to break it here. The arrow marks are showing it tried to break it here. It couldn't break, so it fell down. Once again it made an attempt. The bulls made an attempt to break it. They couldn't. Once again they made an attempt. They couldn't. Fell like anything. Then strongly they tried. They made an attempt. It couldn't. Now finally 1, 2, 3, 4. After 4 times of failure, 5th time also they tried. Now you can see the green candle, rightmost green candle, I mean fourth candle with below the arrow mark. It tried, but it failed. Why did I confirm that it failed? Because see the next candles. Next candle, a red candle. Next to that, it tried to go up, but then it closed. It closed near to your whatever opening. It's just little gap. So it means the bulls, the bears are in power. Next candle also, the wick was longer, which means psychologically bulls tried to take it up, but bear did not allow them to take it up, so it has come down. So I was very sure that it was going to go down, and as per my whatever analysis, it should be showing 1165, because once again support, it would be the support. Or another analysis is, I just went by how much it gave earlier. I mean, once it got rejected from the resistance, how much it gave. I just made a quick calculation, 1 2 3 4. I took the worst of it, means the least of it, which is the second fellow. I thought, okay, chalo, at least that it should give. And I think we know the results for ourselves. The low that was made was 1142 or something, I don't remember, but it easily fell from 1185 to 1142. Some 3% it fell on that day, one day itself. That was good. So basically that's the importance of trend lines. This was indicating a bearish trend, and it could not, it's always getting rejected from the resistance. So which means here it tried to break it, it couldn't do it, so it has to fall down till the next support level. There's no doubt on that. Okay. And if you see the next candle, look, let's so keep looking, draw this trend line on SR transfer and keep looking at it. Next time when it tries to break, and if it breaks, now it's a jackpot again. It should be giving you very good points. So this is how, I mean, as far as I know, we should keep a track of the resistances and supports. As far as I know, the resistances and supports form everything. Okay. So yeah, this is about this is indicating a bearish trend, and it continues to be bearish. Yeah. And yeah, important trend lines. So time frames are important. So stick to any time frame of your choice and look at the trend line in that particular time frame. And levels are important, the entry level and the exit level. The breakout, sometimes it can give a false breakout. Okay, so that's why, as per my knowledge, always wait for the next candle to close. Okay, if you are aggressive trader, you wait, you go to a little lower time frame, nothing wrong, let it close. If you are confident, then enter. It will give you good returns. I told you, the false breakout, it can retest. Once it breaks also, it may come back and retest the trend line. Okay, nothing will happen, do not worry, because you have stop loss in place. That's why always advisable thing is always have a stop loss. Okay, once it is confirmed, you are confirmed that it has broken, just keep on trailing your stop loss. That's all. The beauty of trailing stop loss, it gives you good returns. The last slide for our session. Now these are, yeah, don't get worried, there's so many trend lines, but I'll just try to explain you. So sometime back we made one statement. If you all remember that statement, we said resistances and supports, they swap their roles. Once the resistance is broken, it becomes a support. Just keep this in mind. I'll try to explain this slide. Now I've drawn numbers so that it's easier to identify the lines. So if you look at the first line, it was like our SR transfer chart. So it is now, at present, it is behaving like a resistance. Okay, so Lupin, this is a Lupin daily chart, latest one. Okay, so now unless it breaks this, it will be still bearish. So now I will look at the next candle, tomorrow's Monday's candle. I'll look at it. If the Monday's candle is red, I will close my eyes and sell, because I expect it to fall down till at least the next support. Okay, it could be a diagonal support, it could be a horizontal support, that we have to look at. Okay, well, as I can see this chart, there is a very, very good horizontal support at 840 levels. Okay, so I think I expect it not to break 840 or 845 range. I expect it not to break this. Okay, it can maybe touch 850 is as per my knowledge, but we have to wait till tomorrow's for this thing. But if it is bullish on the other side, once it breaks it, it can give you easily, it can go till 880 or maybe 875 at least. We have to do a lower time frame and then see. Okay, but yeah, so this is strong resistance as of now. Number one, that's about number one, first trend line. Now come to second trend line. This is a little interesting. Now you can see that this start from the left side of the chart. Now this has been a resistance to it. It it broke here. I mean, it couldn't break. It came down. Once again, it made an attempt. So even though it didn't touch the trend line, it still went down. And somewhere in July, it just broke it. That's why I just always tell about, testing, retesting. It broke it, but it couldn't sustain. So it fell down. See how badly it fell down. It fell down so much. So stop loss. That's why stop loss is very important. This is a fake breakdown. Stop loss will help you. Once it tried around between July to September. It tried. See this exact level. I'm not changing levels. It fell down. Next it broke. It went, gave you good points. Good, I think good 50 points, 40, 50 points, whatever. It came down. Now see, till that it acted as a resistance. Now see, it acted as a support. Now it came down, took support from it, and it went up till 990 or whatever. Can you see that? That's the beauty of a trend line. It acts like a support as well as resistance. That's the beauty of support and resistances. Now once again it came here, tried to break, couldn't break, went up. So this now from here onwards it started behaving like a support. Now at 2009, just before 2009 was the last stage, it took a good support and then it bounced up. It didn't break that level. So that tells us about the swapping of the same trend line behaving like a resistance and a support. Now come to the third one. It's a resistance. It started here, fell down, and once again tried to break it. It couldn't break it. Now finally, once it broke it, now you can see it for yourself. Once it broke it, it gave you very good. I would say 780 to 860 is not bad, man. I mean, it gave you some 80 points at least. So and then it fell down. Now see the beauty of this three again. It is now behaving like a support. See, it fell down, and see here somewhere between July to September, it fell down, but this earlier, which was a resistance, now it took support from this and it went up. So I hope it makes sense, right? I mean, so that's the beauty of trend lines, and that's the beauty of support and resistance analysis. Now come to fourth one. Fourth one is a strong support. It fell, took support, went up, fell, took support, went up, and after that it never broke that. It just kept going up. So it's this kind of trend line analysis if we do, looking at the support and resistance. And they're not, trend lines are nothing but support and resistance levels. It could be diagonal or horizontal or whatever. So, but basically they tell us the trend. For example, this first one, it is showing that it's a downward trend. So anything upper, anything lower, if it breaks, because we have seen rectangular channel breakout, it's a channel trend. So if it breakouts on either side, it should give you good, because that's a strong resistance. This is a strong support. If it breaks resistance, good breakout. If it breaks support, good breakdown. So that's how it is. Okay. So this is the beauty of trend lines, trend line analysis. So I repeat, for drawing a trend line, at least 3 points must be there. So you can see any of these lines that I've drawn, I will make sure that at least 3, because books say 2, it should be a trend line, but as far as my experience and knowledge is limited experience and limited knowledge is concerned, 3 points must be there. More, the stronger it is, either support or resistance, whatever. Yeah, I think that's all from my side. Yes. So thank you for all your patience listening. So that's all. Let me stop here. Yeah, any doubts, any questions? Yeah.